Alright guys, welcome back to the channel. It's the 21st of July and today I want to give a bit of an educational video on how you could have made bank shorting gold over the last few days. So here on the 4 hour, you can see that we've had this continuation of a downtrend. If we go to the daily, you can see that the daily has just been literal continuation, no real bounces, a lot of wicks, so we've had some good opportunities to be able to get short again. Now, back to the 4 hour. Because you can see the breakdown even better rather than seeing that just one consistent line down on the daily. So first thing I can see here, right, completely is a downtrend. We had a structural level here where we had a lower low, and then we had a break of that structure to the downside. Once we've put in a low there, you're going to then put your Fibonacci retracement to see where we could potentially be retracing to. Now, just remember, Fibonacci retracements are just a tool to use for added confluence, to give extra confluence and bias onto a level being a more relevant level for it to continue its retrace or continue its trend to the down. So, as you can see, that will be the top. That will be the bottom for this retrace. If we're on the 4 hour, what I like to do is then go into the lower term timeframes. In this case, it will be the 1 hour to have a look at what price is doing in a little bit more detail. Now, before I go any further, this purple line is a daily level here, which is very, very relevant to take note of. You can see it's been multiple wicks, and yeah, like multiple wick here, a wick here as well. So just keep in mind, we've got our levels marked off. So those are going to be the ones that we're going to be looking at more in particular. You want to take the highest probable setups, which means you're going to be, if you want to be buying or selling, you want to be doing them around major levels of support and resistance. This one here is that major level, right? So we're going to see where fibs line up so we can give that added confluence. So we're looking at the 4 hour, we've got that bearish retracement in place. Now, where are we going to be looking at coming back to? We're looking at this purple, or pink or purple. On the daily, you can see, the hourly, you can see a little bit more in detail what's happened here. So we had the low, we had the bounce, you got rejected. This is a 382, right? The 0.382 retracement. First one, generally, what I find is the first bounce on a retracement is usually a failure. So it's bounced, this isn't the proper bounce. So we get a bounce, we get a rejection, but then we get a break above it, and it's going to test another Fibonacci level. In this case, it tested the 50% and wicked up into that daily resistance area. So that was our money. This is our money zone right now. This is our warning. We've got our first signal of, okay, this is a fail rejection. We're coming back up. Now, a couple ways you could have traded this. You could have seen this bearish engulfing 1 hour candle, right? You could have seen that bearish engulfing 1 hour candle. But to be honest, yeah, look, you could do that. However, it wasn't breaking any kind of structure on the 1 hour. So the 1 hour is an uptrend. We've got that's our structural level here. So we had a break above it. And putting in this low here is actually a higher low. Right, is actually a higher low. So this is confirming an uptrend, even though we had this bearish engulfing. You could have entered there as a very simple, okay, I'm going to enter there. We've got a bearish engulfing, rejection at this level, second pump, failure. This is what you'll be looking like. I'm going to enter right on the close of that. Cool. Wick above here, targeting here, and then for an extension a little bit lower. Still a not bad average reward, almost a 2 if you're targeting this low here. It's almost a 1 to 2. That could have been an entry right there. However, what I wanted to see is a break of structure. So we had the low put in here, and then when we get this bearish engulfing, closing below that, that is our break of structure. Let's just put a little circle here. That's breaking this. That's breaking that level right there, as you can see. Break of structure on this candle. What if you had entered here, right? You're going to get a better risk-reward ratio. You've still got a good level as a stop loss. That's a pivot point, you know, a stop and go point. This wick here, if we get a wick take us out here, you know, more than likely it's going to continue up maybe to the 618 or the 786 and further levels. Right? You might even get a rejection here, but that's here nor there, because what we're looking at is we're broken structure on the hourly. We're going to have our stop loss above here. We're going to target these lows we're at 2.3 when we target these lows. I probably would go here just to be safe. Partial profits here. And as you can see, it took some time. You got to set and forget this. This is 0 o'clock on the 19th. You know, we had 9 hours later, we're back into our entry. Rejection there again, which could have been another entry point, which I'll explain in a minute. But if we had that, that's our entry, that's our stop loss. First profit here, second down here. Are we getting all out at this level here? Why? The white is a weekly support. If we go to the weekly, clear as day, you can see wick. It's definitely a major level of support on the weekly. Now, forget about this, guys. This is just where I'm an idea of when price comes back to here. That's why I'm probably looking for a bit of a buy back into this level here. But anyway, forget about that. If we get back to the 4 hour, that's where our target would be. And that will be a trade of almost a 1 to 5. Absolutely beautiful, right? Absolutely beautiful. We should complicate this more than we have to. But that's where you could have had your first setup. If you missed that, it's not over, because on the hourly, as we just said, the idea of you could have shorted right there at that break of structure, or if you want to wait for the 1 hour retrace, you can short here. Leave that on, actually. Extend it further out. Oops. Extend it further out. Right. Now, if you go this 1 hour bearish retrace, you're going to go from this wick to this low. Now, what do? Right back up into the 786. Rejection. Now, going down to the lower term time frames, like I did. Let me get rid of this. Like I did on the 4 hour retrace, we go down to the 1 hour to have a look in more detail of what price action is telling us. Now, on this retracement, so I got the bearish retrace on the hourly, we're going to go down to the 15 minutes to have a look at what's going on in more detail. Right, that was the low. What do we have? What happened? We had a test up into 382 and a rejection. Now that's our first foul. That's our first. Right? So that's our warning bell. Failure. Second pump. We break past that. And what do? We come to another significant level, which is the 786. And look, we're not just doing it because it's the 786 and wow, the 786 is the magical Fibonacci level to short or buy at on a retrace. No, it lines up with this support and resistance area. So you can see here, we've got a wick here. Right, if you extend this, we've got support, resistance. It is a significant level, right? The 886 is obviously significant as well, but I actually do like this more because we use this as support here. We use it as resistance here, broke above it, use it as support, broke. It's a very important level. It is a level. So, if we're on the 15 minute, where would you enter? That one isn't really a bearish engulfing. That's not a bearish engulfing because we didn't break below or close below that candle. This, my friends, it definitely is. So this will be where our entry will be. Right there. Wick here. Targeting that low area. Right. Risk reward of 3.11. So we had this opportunity here, which will be up in profit right now. Yes, we got to set and forget when you have these trades, guys. It comes back up into the area, gets back down, comes back up. You're never hitting stop loss. You need to set and forget. You need to accept the risk. Okay, my plan is to take profit down here, and I'm willing to lose money on this trade if it comes back above my stop loss, which was here. It never did. So sit on your hands, let the trade play out. Bang, comes to there. So there was 2 winning trades here. Whether or not you entered on this bearish engulfing, or you wait for the structural break on the 1 hourly and enter here. Let me just put this in here. Right, you could even say it's going to be, you can even have your stop loss here. If you want to be more conservative, you say your stop loss is up here. But really, that's where you're going to have your stop loss. Oops. Let me just drag this down. Right, same level. So what? You got 2 trades. Your first one, you're at a risk reward of 1 to 2.22. Already hit. And this trade, 1 to 3.11, already hit. But as I said, your main target is down here. Or your final target, I should say, not your main target. So if you would enter both of these trades, trading gold, overall you're looking at a 1.684 and a 1.4. Now that's fucking 10% in one trade. Now remember, I keep on harping on about this in my other videos. You don't need an 80% winning record. You don't need a 70%. You don't even need a 50% winning record. If you've got risk rewards trades of this, you're going to make money. Let's just say you win 30% of your trades and you trade and you have 10 trades on, right? Or out of 10 trades. You lose 7, you win 3. Out of those 3, let's just say your risk reward, you're making 1 to 4 on those trades. So out of 3 times 4, $12,000. Now, how much did you lose on those 7 losers? Well, if you risked $1,000 or 1%, you've lost $7,000. So you've made 12 and you've lost 7. What are you up? You're up 5,000 on a 30% winning ratio. But, that's obviously not ideal. All my point is risk reward is everything. If you've got an 80 or 70% winning record and you're only making 1 to 1, you're not going to make as much as compared to having a strategy where you're making 1 to 4 risk reward, 1 to 5 risk reward, and losing more than you're winning. So always remember, risk reward, risk reward, risk reward. Your trades, you need to be always focusing on how you can milk the most out of them. Yes, you want to take profits along the way because you never know, price action could come here and go bang, take you out at stop loss, but at least you've taken some profit. Maybe you left a half of the trade on the table, 2/3 on the table, 1/3 of the table, whatever it is, that's your own decision to make, but at least you're taking some profits off because the market is so unpredictable. All it takes is one group of traders or one institution or one whatever to buy here and ruin your plan. Your plan is not going to come true because you decided this is my plan. It might come true. You've got your plan in place. You've got your strategy. You've got your edge. Let's just see if it plays out this time. If it doesn't play out, it's not a loser. It's not a losing trade. It's not a you're not a loser. It just means your edge is going to play out this time. That's all it means. But anyway, before I keep going on about risk reward, this is what I wanted to talk about. How you could have capitalized on gold in the last couple of days with this continuation of the downward trend. Low, broke a structure, break a structure, break a structure, continuation, breaking structure again. We might get some kind of a low, who knows? Could be right here, could be a little bit lower here. What are you going to look at doing? Bearish retracement on the fibs. See where price action gets rejected at, but always making sure it's lining up with a significant level, like here, here. All right, there's plenty of levels. You just need to see what price action does when it comes back and tests those levels. But I hope you've learned something from this trade. If you like it, if you like the content, please like and subscribe and keep in tune for when the next video is. So peace out, traders.